I promised to meet you in Tirunelveli on the 10th of March. So the place has been finalized. So I meet you on the 10th of March, the Sunday, at the Maharasi Mahal, KTC Nagar, Tirunelveli, between 4:30 and 7 p.m. See you in Tirunelveli on 10th.
Hi everyone, welcome back to Be Rich. Today I want to talk about the changes which are slowly being enacted in the US bond market, which will have consequences to everybody because US bond market is world's largest bond market and it's the most liquid market, and everybody in the world uses US bonds, and countries buy US bonds and corporates buy US bonds, and it's the primary way the Fed executes its monetary policies, and it's the way the US government borrows. And the yields on the treasuries is a risk-free rate against which assets around the world are priced. But there's been a growing problem in the bond market, which has been worrying the Fed and the SEC and the American government, which was there in the 2019 repo crisis and consequently in the March 2020 market meltdown which happened. What happened was the liquidity was put to strain in the bond market. So consecutively after that, the American government and the Fed got together, the Treasury, and they decided to enact some changes to it. And even Gary Gensler, the chair of the SEC, famously said, it's important to promote dollar's continued leadership and make sure the dollar stays as a reserve currency. And that is done through the US Treasury market and the bond market, because everyone borrows against the dollar and the confidence in the dollar should remain high. And that can only be there if the liquidity of the bond market is strong. So when you say liquidity, what does that mean? Liquidity means, let's say I'm holding something as an asset and I want cash. I should be able to go give that asset and take cash immediately. So that means when you say something is liquid, that means I can immediately sell it and get my money back. And then if I'm panicking and I'm feeling scared, whatever you've given me, you're not going to give my money back. I can give it to you and you get my money back. So that's a guarantee. That's the liquidity, right? So the way bond was traded before was you have some US bonds and you want to sell it. I have cash. You say, here's the bond. This is the amount I'm selling the bond to you. And I in turn say this is a cash, and you and me would trade the bond with each other. And that's how it was been happening. But what happened during the market meltdown in 2019 and 2020 was, for example, there was questions being asked, if I am saying you're selling this bond to me and I'm going to give you this cash, there became a question, well, am I really going to get this bond as soon as I give you the cash? And you are worried if I'm going to give you you're getting the cash as soon as you give me the bond. This kind of question mark started appearing. So when that question mark started appearing, the liquidity was being questioned. And even famously, when there was a cyber attack happening in a Chinese bank, there was questions being asked if those bonds which were held in those banks would be delivered or not. So these kind of questions led to the government in the US and the Fed and the Treasury getting together and enacting some new rules. In December, they passed a new rule that there will be a clearinghouse through which all deals will go through. So this is a third-party clearinghouse. So what it'll basically do is it'll ensure that all bond transactions are done. That it's like a third person ensuring the whole transaction happens. I mean, someone wants to buy a bond, they have to go through this house. Someone who wants to sell a bond has to go through this house. So ensuring the buyer and seller, the deal is done and no one loses confidence in the US Treasury and the liquidity of these treasuries. So what is this clearinghouse going to be doing? This clearinghouse is going to be low profile. It's not going to be like something which will be spoken about much. Other than that, the fact that any buyer and seller will be going through these clearinghouses to ensure and guarantee these trades. Most regulators and most people have welcomed this because this will ensure the security of the bonds and ensure the transaction security. It's like the what we call stock market, and having the NSE and the BSE and SEBI working in tandem to make sure in every transaction which we do, sell or buy a share, that it comes to you, right? If you don't have the market regulators, how as an investor will you have the confidence when you send your money out from your bank account that the share is going to come to you in 1 or +2 trading days. Now in India, they're saying it's going to be try and bring it down to less than that, make it immediate. So that's all that is to increase confidence. So the more confidence you have as an investor, the more you trade in it. The same is true with the bond. So to enable this security and increase the confidence on investors, this clearinghouse is going to be put into place. Now, there are people who feel they should not be doing this because what's going to happen is the size of these bond deals might come down because this is going to incur additional cost into each trade because it's going through a clearinghouse, which is natural because now you're adding an extra layer of transaction in the pre-existing transaction, the clearinghouse. There will be additional cost. But most investors are welcoming this, and I think it is the right thing to do because the world economy depends on the dollar. Right now, everyone in times of uncertainty rush to the dollar, and dollar is considered safe. And even Americans with their own vested interest in the dollar would want it to be safe. Even the American government will not want to let go of the supremacy of the dollar, so they'll want to hang on to that. So even in that sense, this play makes absolute sense. And it gives greater transparency into every single transaction. There will not be any, what you call, nefarious activities in the bond market, which may dampen investors' spirits and investor sentiment and make them not accept US Treasury. If that ever happens, this is the biggest problem the American government can face because the primary way the American government borrows money is through this bond market, where they issue bonds and people world over, governments and banks and countries and individuals and corporates, everybody buys American debt because they know they will be paid. If there's any loss of confidence in that, it is the first chip which will dismantle America. So this is the further cementing and securing that market so that there's no way anybody can disrupt the dollar market. Because recently there have been cyber attacks and there's been threats of cyber attacks, and in the looming world conflicts which are happening, cyber attacks and AI is going to be one of the tools which will be used by countries against one another. And bond market currency destabilizing the dollar could be one of the primary motives of any country like Russia or China upon US if they want to be aggressive against the US is to destabilize the dollar. And the bond market is the best way to destabilize the dollar. So this prevents that from happening and gives more security to the American dollar and the American bond market, ensuring whenever the American government needs to borrow money, it has easy access to borrowing capital. I've spoken about decoupling the dollar with Arun on a podcast, and this is the exact reason why they did it, because they can raise funds whenever they need it. Yes, America is going through a debt binge where they're borrowing more and more to facilitate their needs. And there's growing concern within the American population and the wider world that America cannot sustain this kind of debt levels. But what can cause this to come crashing down is if America is unable to borrow. So even if the Congress allows the American government to borrow and no one wants to touch the American securities, that could be catastrophic for them. So this prevents that. So now as a bond trader, what does that mean to you if you're buying and selling American securities? Well, if you're a small investor like you and me, we really don't have to worry about it. Our costs will be very marginal. But if you're a large bond trader and you're trading in huge securities, in American Treasury securities that too, you will see increase in your cost. Of course, this is going to be mandated from December 2025. It's not an immediate mandate. They're working on it, and there are a couple of more things that need to be sorted out about how exactly the transactions are going to be executed and what are the modalities behind this that all have to be figured out, which will happen by end of this 2025, post which all bond transactions will go through a clearinghouse. I'm surprised that it has not been there from a long time back and it's taken them this long to get it done. But it is good news and it's great news. Brings more transparency and openness to the bond market, and kudos for them doing it, is my humble opinion. Anyways, thanks for watching the video, guys, and I'll see you in the next one soon.